Hello everyone, it is Red with RedDragonLeo.com. It is Saturday, June the 22nd, 2013. And I normally do these on Sunday, but I just had inspiration today. Just a lot of things just pointed out to me in the charts that I guess I had missed before, but I think there's a high chance that we could literally have a possibility of an 80 to 100 point move down in the SPX, what you call mini crash move, on Monday. And there are several reasons that I'm looking at that. One is what I see in the charts, and then two is time-wise, based upon how fast we went down in the A wave, only really about a day and a half, and it looks like we're in a B wave up right now. So I'm calling this a C wave because I think this is going to be a three-wave pattern. I think it's very possible this C wave could happen all in one day, on Monday. So what I am expecting is a rally in the morning to possibly gap window around 1620 on the SPX, and then a crash move down to approximately 1520 by the end of the day. I know it's crazy, but it's in the charts. I can see it. It also happens to be Satan's Day. It is 666. When you actually look at this, you can see June is the 6th month. 2 plus 4 is a 6. And 2 plus 0 plus 1 plus 3 is a 6. So you got the year as a 6. You got the date as a 6. And you got the month as a 6. So it's 666. Satan Day. The perfect day, if they're going to do a crash, that would be an absolutely perfect day to do it. I definitely believe it. Will it happen? I don't know. I can't sit here and guarantee you that it's going to crash. I can only say that the cards are lining up for that, for a nasty wave down. So I did some charts here for you that you can look at to give you the idea on what I'm seeing. If we look first at the ES, the reason I'm looking for 1520 here on the ES is this line here is 1525. So I'm thinking we'll go down there and hit somewhere between 1520 and 1530. It's common to go down and actually pierce something like that to really scare people, but that would be the area that you would want to bounce from and look to get long from there, because that would be the area I think it would bottom and stop. And you can see that if we did that down here at the very bottom on the MACDs and the histogram bars, they're going to be pretty buried on Monday if that happens. But it only took 2 days, but it's really only a half of a day, only an hour and a half after Bernanke spoke at 2:30 on Wednesday did the market really tank. So it was only an hour and a half there, then all day Thursday and a little bit of Friday morning. And then the B wave up started. So time-wise, you can have a huge sell-off like this, a C wave. You got to think it's probably going to move faster than an A wave, and that A wave moved very fast, a day and a half. So you've got to think that time-wise you actually could sell off in one day that many points on a panicked C wave move down. And the obvious reasons that you would see it move faster and be a panic wave is because traders would be in the capitulation mood. I mean, they would just be throwing in the towel after they've seen a rally up to 1622, and then they see it roll over, and then once it goes down and starts breaking the 1577 low again, they're thinking, you know, it's over. And, you know, they just throw in the towel at that point and start selling everything once they see that. So that's kind of why I think that it's very possible. I'm not going to say it's going to happen, but it's in the charts. It's in the charts that it's very possible it could happen. Here is the chart I've drawn here for the 60-minute chart on the SPX. You can see this line and this line was a channel, and you can see it's coming up there around 1622. This downward sloping line right here is right now at 1625, but it's a 60-minute chart, so it'll probably beat it down to 1622 by the first couple hours in Monday. So these could very well meet and form a necktie of resistance, double resistance right there, and that would stop the market if it was to hit that. And that's also gap window at this lower edge, gap fills like 1628, I think. So I don't think it's going to get the gap fill because it can't get over this trend line. Can't get over that trend line. And then there's also, I think 1618 is the 50-day moving average. You got on top of that, you've also got here, I did the Fibonacci levels, and it looks like 1616 is the 50% moving average level. When the I don't mean moving average, I mean 50% retracement on Fibonacci levels. I don't usually use those. I find the trend lines work a lot better, but when you combine them all together, you're hitting that same zone, 1616 to 1622 range. So everything there certainly points to me to tell me that that is very likely the target of where we're going to go to on Monday. And it could all literally happen in one day. I know it's crazy, but it very well could. So I wrote up a lot about that here in here, and I tell you what we'll do. We'll get out. Let's see here. Let's get this chart here and just look at it, and we'll actually draw on it for you if I can to make it easier for you guys to understand. Let's see. Boom. Da-dum, 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 da-dum. You gonna work? Okay. Hopefully it will work there. All right. Okay. Down here, you can see obviously that the market is very, very, very oversold down here at -10. But what will happen? What should happen is for it to work its way back up and then kind of work its way back up and then have one more move back down and put in a higher low. That's how you get your positive divergence. So you go up here like this, and boom, you go back down, you put in your higher low, and you draw your line, and the market rallies right, or the market bottoms right here on this here, where it's a capitulation move. So if all goes well, hopefully we'll see some type of gap up on Monday to really get the bears out if you can. I don't think there's as many bears in here trapped right now as there is bulls wanting to sell, but I think if they gapped it up 10 or 15 points, it's very likely that if they had a gap like this, and very likely that the bulls will be celebrating and go, yeah, go, 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 and they'll be waiting for it, and they'll come up here, and it's going to hit this necktie of resistance from this line that's sloping down and this line that's sloping up. And when it hits that line of resistance, it is very likely, hopefully by midday or something, at that point you should see it to roll back over, and this time it should start getting momentum and be an entire C wave down and all the way down here to about 1520 to 1530 area. And so if you actually counted the waves, you'd have basically, let's see here. You'd have this first wave down being your large A wave. You'd have this wave up being your large B wave. And then this is your capitulation C wave. And that's what I'm talking about when I was saying ABC. Obviously inside this you have smaller waves inside it, but it's pretty panicky, as you can see. It's hard to even count these waves on this chart, because it just looks like almost one big wave until you had one little bounce right here, and then continued on down, one little more bounce there, and that's it. But it's very hard to even see. It's like almost one just big huge wave, but it's a scary wave, and you know, you can expect the C wave to be even worse than that. So let's go over here and look at the let's see, let's look at the time frame, the daily. That's what we want to look at. And what we're going to look for is that area that I'm telling you about. Okay, I know there's a lot of lines on here. Bear with me. This is the 1536 low that I was telling you about. And this whole area here, there's a low here, a low here, and then a low here. And then you've got 1520 right here, which is this line and you've got a lot of support right there. You see all those days it chopped around there, then went up, then finally fell back down, come back. A lot of support right there. Here, there's really not that much support. There's 1, 2, 3 bottoming tails. So that's why I said we're going to go down there and test the 1536 low. And I think that's what's going to happen. So here's this line right here. You can see it looks like a really good necktie right there of resistance. So if we go up in the morning, if we are able to hit that, I don't know for sure that that's going to happen. It may not. It may be too weak. Maybe it only goes up to the 38.2% Fibonacci level, which is about 1606, I believe. But if we hit that, that's your ideal spot for the top of the B wave, and then you go down and you literally hit right there, this big line of support right there. You break this because there's really not support. These are bottoming tails, or it's trying to find support, but I think it's going to go through the 1536. That's what I'm saying. And then bounce it to 1520. And then we should be doing lots of, it should be a powerful rally. I do not expect it to go above this 1587 May 22nd high. But, and I think that'll, after that, when you go long here, I think it's going to be choppy, of course. But I think it's going to last all the way into late July. That's where I think it's going to go. So, if that happens, then we're going to be looking for the crash wave down after that. That's going to go probably down to 1420, 1440 area. But that's not going to come until late July, early August. That's when I'm expecting that to happen. Now here you can see the same thing here on the ES. You can see exactly what I was talking about. This line of support right here is 1524.97. You can see it bottom there, bottom there, bottom there. So that is, again, a lot of support on the ES as well. Now let's look at the 60-minute chart here on the ES real quick so we can see the lines that I'm drawing. And here we go. You see this line here. Now we're also showing, with the ES, we're showing the after hours trading in here as well. So this is not just the daytime trading. So I went basically from the close there on that particular candle, not the actual top, went to the close there. And I think I went to the close there and close here. So you can see this line. And where does it point to? It points to 1620 on the ES. So that's about the same zone that we're seeing on the SPX. So we would want to see the market gap out of this area of resistance and this channel, gap out of here right off the bat. And I don't know if it's going to gap up and then drop back down and then make another run all day. It's got to be based upon time, so I don't really think it's going to have a whole lot of time to do that. So I would hope that if it gaps up above 16, at least above 1595, it's got to get out of that zone. But if it was to gap up at 1600 and make a run for this area here, that's your perfect point to short for a crash wave down again to this level right here, the 1625 area. Well, are we going to get that lucky? I don't know, but I'm telling you, the charts definitely support it. They line up for it, and so if all goes well, we'll see a move like this Monday, early in the morning within the first couple hours, and then we'll see a move like this, come down here, and bam, hit that area right there, bounce off of it. That is a crash wave, my friends. That is an A, that is a B, and that is a nasty, nasty C. It is possible. I'm not going to sit here and tell you it's guaranteed. Nothing's guaranteed in life except death and taxes, I guess. Well, taxes aren't guaranteed. That's only for the poor people to pay taxes, not the rich elite. So only death is guaranteed. Anyway, that is it for now, gang. So I'd keep your eyes on it. And one more chart here I'll throw up real quick. Here is the VIX. The VIX could very well, if we open up here, it could drop down here and possibly fill this gap. If it possibly fills that gap right there, that'd be the spot you'd probably looking for the market to hit a top. So in that area. So keep that in mind as well. Out of time, gang. I'll see you on the blog.